minutes. But how should you position yourself in the last hour of trade? Mitessh Thakkar is back with us with a few closing strategies. Mitessh, is it time to take a U-turn? In the morning, you were telling us buy the dips. Are you buying the Nifty at 17,600 or are you reversing the strategy?
Good afternoon. One, I think, the overall trend and the bias remains on the upside. Why I was, suggesting to buy into dips and not, the higher levels was of two reasons. One, I think there are some weekly averages around the 17,650 zone. And in the last 5-6 sessions, today being the sixth session, in the last 5 sessions, we have had a rally from 16,900 odd levels to as high as about 17,650 odd levels. So roughly about 700, 750 point kind of rally had happened. So once you've had a rally, you are also running into some weekly resistances. There could be a couple of days of consolidation, which is what I think would be a very likely and a strong possibility kind of an outcome. And therefore, you might not want to buy it immediately and buy it closer to the 200 average area, which is about 17,522 today. So on a dip to about, let's say, 17,560, 550 zones, that will be the level when I would want to take a position on the index. But on the long side, because the overall setup and the overall bias is clearly on the positive side. Same approach is what is being reflected in the stock calls as well. We've been having buy calls throughout the day, and I have 2 more to add to the numbers. REC and PFC is something which I've discussed earlier, giving a buy call on REC. I think PFC can be added to the buy list as well. Keep the stop below levels of 161. Look for targets of around 175 on the upside to begin with, and we may even actually look at targets of 180 here. So very positive setup on this. And Bajaj Auto is the other call where I would recommend buying with a stop below 40.25 for targets of around 41.30.
All right, Mitessh, I wanted to ask you on Redington. The stock had moved well, but then it saw a good correction of close to around 15% from the peak. I think the next level you're looking at is around the 100 DMA, which is at around 177 odd. But it's crossed the other crucial technical levels. Any view on Redington?
So, Nigel, I think, the stock, I have not been tracking it regularly, but an early look on the charts tell me that, the stock has completed its correction. It made a last swing high around 190 odd levels in January and then went to as low as about 160, taking about 2.5-3 months kind of time frame. So it was a time-wise as well as price-wise correction. And today, I think some kind of breakout has taken place. Keep today's low as the stop loss, and I think this should again go back to about 190 in the next coming few days. So gives you about a 5.5 point kind of risk to about 15 points profit. And in case the charts improve further, then we can revise the target upwards as well.
All right, Mitessh, thanks a lot.